What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is the fact that liquidations and margin calls are starting to occur, and it's only going to get worse for these institutions because of the fact that NSCC-002 was approved today, and it is scheduled to go into effect this Wednesday. This is the automatic margin call rule, where instead of calculating the supplemental liquidity deposits around the monthly options expirations, they are going to be happening every single day. Now, there's also a lot of other information that revolves around this huge collateral crisis that is going on in our markets right now, and I want to make sure you guys fully understand the big picture of everything that is going on and how it affects us as AMC shareholders. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys would like to earn those 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. Now, something I want to address before we go any further in this video, I want to bring to your guys' attention the key indicators that I have been talking about over the last couple of weeks that signify when we are getting close to the squeeze, in the squeeze, or near the top of the squeeze. Now, I do not believe that we are in the squeeze at all at the current time. As we can see by the price action today, we are down a significant amount, and we're going to go over exactly why that might be a little bit later in this video. But right now, we are definitely pre-squeeze. And the 2 indicators that I have been looking at are going to be the hedge fund bankruptcies and overall market sell-off in whatever market it is. Now, crypto has been a very interesting case study that I have been looking at over the past couple of days. Now, when we look at Ethereum has seen a very significant sell-off over the past 24 hours. We've seen it at the top at about $2,200, and it came all the way down to $18.91. This signifies to me that these different institutions need liquidity and they are selling off their different positions. We also saw something very similar happen last week with the S&P 500. If we take this out to a 5-day chart, we saw a sell-off here, and the same thing happened with the Dow. Now, I do want to go back to AMC's option chain to go over the possibility of having another gamma squeeze this week. And when we take a look at this option chain right here, nothing really jumps out at me in a big way. This is a pretty typical week for AMC. The only thing that I could see occurring is that this volume number right here, this 38,000, could get reflected into this open interest number tomorrow. So this open interest could jump up to maybe 20,000, 25,000 contracts. We don't really know at the current time, but in my opinion, this week is not setting up for a big gamma squeeze. Now, something else that we definitely need to bring up as well is these T+35 FTD dates. So when we look right here, we can see that the FTDs jumped on May 3rd, 4th, and 5th, mainly on May 3rd, because these FTD numbers are a running net aggregate total. So today is the T+35 day for June 21st. Now, we did not see a significant jump in the price today, but tomorrow it is always possible. And then we also have another T+35 string right here on June 25th, 28th, and 29th. So that is something to look out for any days that we could see a significant spike in the share price. But again, I don't want to give you guys any date expectations for when we see the squeeze, but I do think that looking at these T+35 dates can give us some better insight into the type of price action that we could see on any specific day. Now, let's get into this collateral crisis and why this is such a big deal for all of these institutions and why it helps us out as AMC shareholders. So the first thing that we need to address is these new reverse repo numbers. So today, we were submitted with about $765 billion in reverse repos, and the award was about 5 basis points. So what exactly does this mean? When we come over to this Reddit post right here, this individual right here, Ace Vector, actually puts this in a great way. So hence, we have a sudden jump in both counterparties as well as the total reverse repo number amount. For such a large jump in a day, however, shows that there was a lot of demand for Treasury collateral. So this means that they are starving for collateral right now, and they need Treasury securities to put up as this collateral, and they are also making a small return on this. This proves to me how bad this collateral crisis truly is, something that I agree with as well, and how desperate banks and other counterparties are to get a hold of meaningful collateral. What's weird to me is the timing all of this. I mean, you don't find it weird that around the same time 005 gets put into effect, counterparties are incentivized to borrow more Treasury collateral. So that's going a little bit deeper. But essentially what is going on here is the fact that the reverse repos are jumping so much. And in a reverse repo transaction, the banks give the Fed cash, and they are returned with Treasury securities, which they can use as collateral. So in the United States, our Federal Reserve is actually kind of helping out these banks right now in terms of these reverse repos, but eventually this is going to get wound down. But in the EU, something very different is happening. We brought this up a couple of times, and we can see but 10, including big players such as JP Morgan, Citigroup, Bank of America, and Barclays, have been told they cannot take part in these bond deals because of previous involvement in market rigging scandals. So they are not even able to get their hands on this type of collateral in the EU. Now, there is also something very interesting happening this week as well. When we come over here, we can see that climate on agenda as Biden prepares to meet with top financial regulators. Now, when you take a look at the list of people that Biden is meeting with, White House officials said Treasury Secretary Janet Yellen, Federal Reserve Chair Jerome Powell, acting comptroller of the currency Michael Hsu, I think is how you pronounce that, as well as the heads of the Commodity Futures Trading Commission, Securities and Exchange Commission, and the Consumer Financial Protection Bureau would be among those participating in the meeting. Now, I highly doubt that these well-versed individuals in the world of finance are coming to meet with President Biden about the overall state of climate change. It doesn't make a lot of sense. What makes more sense is they are going in to talk about this massive collateral crisis, the massive spike in the reverse repos, and what they need to do about this. It is entirely possible that we see some government action resulting from this meeting over the next couple of weeks, and this is something that we definitely need to look out for. Now, something else to keep in mind is that all of these individuals, these big banks, these institutions, the Fed, everybody involved in our financial markets right now, there is not a light at the end of the tunnel for them. This situation just keeps getting worse and worse, and there really is no date that they can say, hey, if we hold out, we can continue kicking the can down the road, and maybe this will get better in the future, and we will be able to hold out until then. That is just not the case right now. We continuously see these great proposed rule changes come in, and personally, my favorite rule change has just been approved, like we discussed earlier. So it is therefore ordered, pursuant to Section 19B2 of the Act, that proposed rule change as modified by partial amendment number 1, SR NSCC 2021-002, be and hereby is approved on an accelerated basis. This is the automatic margin call rule for supplemental liquidity deposits, and this is going to be very bullish for us as AMC shareholders once this rule actually comes into full effect on Wednesday. Now, switching gears back to this collateral crisis, and we can tie this all in with AMC. If all of these institutions are starving for collateral, how are they getting their hands on it without the help of the Fed? Because those loans have to be repaid, and they have to return those Treasury securities at some point. And they're doing this through a process called rehypothecation. So when we come over here, Goldman Sachs actually recently opened one of these accounts on June 14th, and we've briefly covered this before. What rehypothecation is say, for example, you have a $100 million account at Morgan Stanley, and they are managing your money for you. If you engage in the fully paid lending programs that these institutions offer, and you guys should all know about that by now, we did see a really interesting report come out from the SEC about fully paid lending about a month and a half ago. But if you are engaged in any of these programs, Goldman Sachs can take your investment account that you have with them, that they're managing your money for, and use it as their own collateral. So it's essentially fake collateral that they are using in order to make sure they are meeting their liquidity requirements. Now, the second thing that they can do, which is the last option that these institutions really want to be engaging in, is going to be selling off other assets. That is why we are seeing a fall in crypto. We are seeing a fall in the S&P 500 last week. The Dow Jones did this basically the same move, and this is putting immense pressure on not only shorts, but on institutions that are massively over leveraged at the current time. We all know that the margin debt is at about $850 billion right now. And when you compare that to 2008, the margin debt was only in the $300 to $400 billion range. So when we're looking at our financial system as a whole and what exactly is going on with the AMC situation, it is not looking good for our broad financial markets. We are seeing a rally up towards the end of the day, and I do believe that this was one of the last-ditch efforts that the funds were using in order to basically shake out retail and spook them into maybe selling their position, because obviously they are watching us. They know that these proposed rule changes are coming out, specifically NSCC-002, which we have been all excited about. And if they can push the price down on a day that we know long term is incredibly bullish for AMC, in their mind, they are just trying to shake out some of the maybe weaker-handed retail investors in order to sell their position. Now, personally, I am not even going to consider that the sell button exists until my two indicators are met in a large way. I am not even thinking about it until we see those hedge fund bankruptcies and overall market sell-off. Now, we are starting to see this in a small way across a couple of the different indices and crypto, but I do think that this situation is going to get a lot worse and much better for us as AMC shareholders once we see the short squeeze play come to fruition. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.